Time now for an in-depth look at the market news, and for that I'm joined on the line by Dr. Jun-sok, professor of economics at the Catholic University of Korea. Dr. Yang, thank you as always for coming on.
Happy to be here.
Well, some perhaps less than positive news for those hoping for a trade deal between the U.S. and China. President Trump warning China that if there is no deal, he'll raise tariffs even higher. What's the story in the markets today?
Okay, well, the U.S. markets this week, the American markets have actually been doing fairly well. S&P and NASDAQ, there has been little changes, but still, they're holding relatively steady near historical highs. Dow has gone down a little bit, but that's because they were at a historical high to begin with. So in a sense, they had no place but to go down. But I think still the markets are overemphasizing the good news, which also makes every bad news that comes out have an adverse effect. So by concentrating so much on U.S.-China trade negotiations, I think it's amplifying the effect of that in the market, stock market, perhaps more than it's justified. Now, the other reasons that the U.S. market is doing so well seems to be that President Trump is continuing to put pressure on the Fed to lower rates. And that, I think, is going to be very interesting in the long run because, well, the Fed said that they're not going to change the rates anytime soon. But if there is going to be so much expectations of a lower rate built into the market, it's going to be interesting to see what the Fed chooses, whether they're going to choose to keep their word and risk a lot of disruption in the market, or just follow the market and try to keep the market calm by lowering the rate another 0.25% within the next 3 or 4 months. Now, the other markets, other than the United States, the European markets and the Asian markets, except China, they were mixed for this week. And China, a little bit of good news, I guess. The stock markets, both Hong Kong and Shanghai, seems to have risen a little bit during this week, but that's partially because it fell so much during the last week. And I think there, the government stimulus plans are having more effect in the market than the trade negotiations.
Right. Well, speaking of those negotiations, the IMF's been saying that even if the U.S. and China do strike a deal, economies like Korea, the EU, and Japan will be affected. I think that's clearly true. Why is it that their exports would suffer, and how badly would Korea be affected?
Okay, well, the U.S.-China trade war, it's actually only one of the problems that we're facing right now, not only Korea, but globally. Other problems include economic slowdown in China, which has been going on even before the trade war. And organizations like ESCAP, they've been saying that the Chinese economic slowdown will probably have a bigger effect than the U.S.-China trade war. The U.S.-China trade war affects perhaps about 4% of Chinese GDP, but when the Chinese growth slows down, it could obviously affect a lot more than just 4% of the GDP. And from the point of view of Korea, the potential risks, I think, reflect that. The UN ESCAP organization did a survey last year, and about 1.2% of Korean exports, Korean GDP in terms of value added, were potentially affected by the trade war. But when you consider, in addition, the Chinese economic slowdown, that percentage went up to 15 to 18%. So for Korea and the rest of the world as well, the Chinese economic slowdown is as big or even bigger problem than the trade war. And in addition to that, we have economic slowdown and uncertainty in Europe as well. And then there's the problem of whether President Trump will impose a high tariff on automobiles. If that takes place, that also has a potential to have more effect in Korea than the U.S.-China trade war. So even if we do muddle through the U.S.-China trade war, there's actually a lot of other problems that we have to muddle through.
Well, meanwhile, in Korea, we have Moody's pointing out some problems in Korean companies. Of the 24 firms it monitors, it has a negative outlook for 14 of them. Can you comment on that?
Okay, well, obviously, the Korean economy is in a very serious slowdown right now, and we just had third quarter reports at the end of October, and most of them have not been very good. Now, if you look at the individual corporate reports, 3 out of 10 firms experienced earnings shocks. This includes not only the firms that are being monitored by Moody's, but firms that are in the Kospi stock market. And as I said, 3 out of 10 experienced an earnings shock, lower earnings that were much lower than what the market has expected. That includes Hyundai Motors, which earnings came in 29% below expectations, LG International, which came in 22.8% below expectations, Samsung C&T, which came 21.4% below expectations. And then if you look at the Kospi firms altogether, then the operating profits for all the firms that are registered in Kospi fell for 4 straight quarters, and only about 3 out of 17 industrial groups had increasing profits in the third quarter. Now, one of the problems with rating agencies is they don't always foresee problems. We saw this in the Asian financial crisis and global financial crisis. Sometimes they overestimate or do not fully account for all the risks, and then when those risks come up, they make adjustments very quickly. That may be what's happening at Moody's here. I think for the last year or so, they somewhat underestimated the problems that Korean firms had, and then now because of the bad reports that we've seen in the third quarter, maybe they're overreacting to it a bit and dropping the ratings much faster than it should, but I think that's in the nature of the ratings agencies.
All right, Dr. Young, very interesting discussion, but we'll have to leave it there for today. Thanks so much for sharing your insights, as always.
Thank you.